Passive Canuck here with another video. And today, we're going to be talking about one of my favorite holdings. This happens to be VDY, which is Vanguard's Canadian High Dividend Yield ETF. Vanguard as a fund manager is considered the blue chip of exchange-traded fund managers. It is very popular for many Canadians looking for all-in-one exposure ETFs at minimal costs. VDY is no exception, with some of the lowest fees around. Its MER is currently listed at 0.22%, much cheaper than some of the expensive mutual funds you'll find out there. The fund's primary objective is to track the FTSE Canada High Dividend Yield Index, and invests primarily in Canadian stocks that pay dividends. But just so it's clear, in terms of holdings, this is a fund that is very top-heavy in the financial sector. Primarily Canada's Big Five banks. Royal Bank of Canada and TD Bank are the only two companies in the fund that have double-digit weightings. And Enbridge, the Bank of Nova Scotia, and Bank of Montreal are just behind RBC and TD to round out the top 5 holdings. So while there are 45 holdings in the fund, VDY is a heavy financial play with over 60% exposure to the Canadian financial sector. For some visual reference, here is what the top 10 holdings in VDY looks like. If you're looking for a full list of holdings, you can head over to the Vanguard website. I'll leave a link in the description for you so you can check them out for yourself. It's very important to keep this in mind when considering investing in VDY. I personally love the fact that it holds a lot of the financial companies in Canada, because I think those are some of the best businesses that exist on the Canadian market. However, if you're looking for a bit more diversification, VDY might not be for you. VDY currently has a trailing 12-month yield of 3.36% and is quite a large fund with assets under management of $1.7 billion. What's also nice about VDY is that it pays monthly dividends. So if you're looking to set up a DRIP with a solid ETF, it's a great option that will compound for you each and every month, so long as you have enough invested to hit that DRIP threshold. I have personally held VDY since September of 2020, which is when I first began investing, and I have it on a DRIP as well. Since then, my VDY has gone up over $12,000 in value, and my yield on cost is at a healthy 4.39%. I currently hold 1,116 shares of VDY. And at the moment, I'm dripping 3 shares per month, which are compounding month after month. Soon, I'll be able to afford 4 shares each month. In total, I have earned $2,051 in dividends from VDY, which is my highest in total dividends earned at the moment. Hopefully, this gives you a good overview of VDY currently. It has been one of my best performing holdings and my tried and true from the start of my investing journey. So you should understand that I speak about it with some bias as well. Does my success with the fund mean that it is right for you? Of course not. Nothing is guaranteed. As always, it's important to remember that I am just an everyday rookie investor, and the content on this channel and my blog is not to be taken as financial advice. Always be sure to do your due diligence before investing in anything. I appreciate you all for watching and supporting. And with that, I hope you have a wonderful day. Oh, and don't forget to smash the like button. Just smash it. But be careful not to break it. It can sometimes be delicate. If you're not subscribed, you can do that as well. It will make it so that you don't miss any of my future videos. This is Passive Canuck signing off.